All right, we're officially live. Today's the Seth and Seth show. We've got myself, Seth Teagle, obviously. We've got Seth Asman from SVN, a good friend of mine who's a broker that we use and work with a lot. So I wanted to kind of give you guys a brief introduction to him and what he's accomplished so far in his career, and then we'll just jump right into it. So he represents SVN, which is a national brokerage that does a lot of commercial. They do various different asset classes. Out of that, his local group here to Columbus is what the top. You're in the top 50, and you're in the 3% nationally ranked SVN. That's, I guess, SVN as a whole, and then your guys' local group is number 6 out of 240 SVN offices in the country, if I understand that correctly. He brings 21 years of experience in commercial real estate, and then that spans over various different asset classes. We primarily have done a lot of deals with multifamily investing in apartment buildings, but he can talk about all kinds of other asset classes if you're into self storage or businesses or whatever the case may be. And then he's been awarded the Partner Circle Award, which is a very prestigious award within the SVN community, and not easy to get. So I'm glad that he was willing to give me some time today to talk to me and to everybody else that's watching, and we are just going to kind of shoot from the hip and talk about commercial multifamily, commercial real estate, like what's going on in the market nationally and what he feels is going on locally and all that different stuff. So Seth, I appreciate you jumping on with me.
Good. Yeah. Thank you, Seth. And it's good to get some time together. Uh, it seems like a lot of times when we talk, we're always rushing and working on either some finer points on a deal or uh, just rushing through some details. So I think this will be a good opportunity just to um, get together. And I really appreciate the opportunity to speak on your platform, and look forward to engaging with with the network here, both live as well as through the Facebook group as well, which I think is doing really well. And just as you mentioned a little bit about SVN, it's a large national broker that specializes and focuses on commercial transactions. And if you've been around commercial real estate long enough, you've kind of figured it out, or maybe you feel it, but the commercial real estate industry is very fragmented. Whereas you think about the residential side, it's very well organized. And so if you want to sell a house, you're typically going to go down the street to your local residential realtor, and it might be a Coldwell Banker. It could be, I guess Sotheby's now has a residential, flag. HER Realtors, which is here locally, and I think they just got bought out by Howard Hanna. But you know who the residential brokers are, and then typically the buyer is going to be brought by another residential broker. But commercial tends to be fragmented, and so SVN has a focus specific on commercial transactions for leasing and brokerage sales. And as it goes, they tend to organize the commercial real estate community very, very well. Whereas what we see in the marketplace is, a lot of it's not broadcast necessarily as clearly as what you would see in the residential space. So I think that's something that SVN has done very well, and is corporately driven to perform that level of industry-wide, marketing and service. And that's kind of what was a draw for me as I came in. And just a little bit about me. My wife, her family's been in this business since the 80s. Her father was an oil and gas guy. And then when legislation came in the 80s under the Reagan administration, kind of swallowed up a lot of oil and gas industry. And so he got into commercial real estate. And he started with a group called Matthews Click Bowman back in the day. And then that ended up merging with a group called CBRE, or CB Richard Ellis, which we know today is one of the largest kind of universal commercial brokerage firms. They do property management, analysis, lending, all of that, the full spectrum. And from there, then Doug went and started up a firm called Marcus Millichap, and he started that here in Columbus and Cincinnati. Eventually, he went independent, and then he was recruited by SVN, which was called Sperry Van Ness back then. And he's been a part of that group now for almost 20 years. So we kind of have commercial real estate in our blood, you might say. My wife has been with the family business since '04, and then they recruited me a number of years back as well. And so, yeah, so I mean, we as a brokerage, we do the full spectrum, and then I tend to do land development and apartments, and so I really enjoy that. And we do other things from time to time, but that tends to be where I spend most of my energy and my effort.
Yeah, yeah. And I would say too, like a couple things to anybody listening. If you've got questions, you can ask them like in the comments, and we can see that, and then we can kind of answer those. If you don't have a StreamYard account, we won't be able to see what your Facebook profile is or whatnot, so we may not answer them directly to you, but we will be able to answer them if you got some. So the other part of this I wanted to kind of just bring up and kind of lead into our first kind of topic is how relationships are such a big deal, like in the commercial space. I know, like out here where I live in the Columbus area, I live more like Licking County, which is about, it's a adjoining county to Franklin County, but there's really not a whole lot of commercial brokers out here that deal with multifamily. I know when we first started looking in stuff out in this area, it's really hard to figure out like who do I call and where do I look, because out here a lot of stuff that is being sold is traded through realtors or just kind of seller to buyer directly, because there are a lot of friends or, just investor to investor type stuff. And so, when you and I met, it's funny because our kids go to school together, and we probably passed each other how many times, and you didn't know I bought and I didn't know you were selling. So it was great when we finally did meet on a deal. And, I think that that's something that I wanted to kind of express to everybody, that how, whether you're taking on investors in a multifamily deal as a syndicator, or, you're just trying to get into a market where, maybe you're an out-of-state buyer and you're like, hey, I want to buy in the Columbus market. The biggest thing that gets you in the door is the relationships, and and maintaining those and having those is much more probably important than the asset itself that you're trying to buy. Or that's really how I think you get I wouldn't say the leg up, but you get for you who's selling something or representing a seller, they want you to take it to somebody that they know is going to be a buyer and is, I wouldn't say a sure thing, but has been vetted. And I think that's super important, as far as the relationship piece goes.
Yeah, absolutely. I would say, well, and it's funny too, you mentioned how we live in the same town and our kids go to school. My kids are a little bit older than yours, so probably won't be in the same building anytime soon.
True.
But, we do pass each other all the time. And the way that we met was through a multifamily deal where Seth and his partner, Tim, ended up being, principals with the group that ended up buying it. And we made that connection. And it's really kind of cool because a lot of firefighters and other, I guess what we call them now, frontline workers, are very astute in making real estate investments, whether it's full scale commercial or maybe single family flips and rentals and things like that. And in my experience, have done very well, with that effort. And that's kind of how we met. And you guys are just, there's a lot of synergy in terms of what your goals are and kind of where I work. And so I think it's been a great partnership, but also it's just an opportunity to kind of help each other build in some ways. And so I think that, to your point, when you think about being successful as a commercial investor, a commercial real estate investor, those relationships tend to be everything. And, the same thing is true on my side of the table. I don't approach any client, any deal as if it's going to benefit me. And obviously there's a benefit, but if it's not a win for the property owner, if it's not a win for the lender, if it's not a win for a market, then it probably has a little bit of work that it needs to be done in terms of as a deal. And so as much as we all like to find a property and get excited about it and start thinking about it, it has to be the right deal. It has to be the right fit in all phases. Otherwise, you might be spending your time, dreaming about it, but never closing a deal. And I've seen that too. I've seen that from investors who are hungry and motivated and ambitious. And there's a disconnect between, getting after a deal and closing it. And so
Yeah.
we work with them on that, and we like to give comments, and every market's different. Columbus is going to be different than Cincinnati or Dayton or some of these tertiary markets. And I think that goes to why it's important to have relationships, because the professionals can really help guide you to being prepared and then making good decisions.
Yeah. Yeah. And I would add to that too. Like, I probably don't even know or understand how many phone calls and emails you get from other investors every day. I mean, I know that a lot of the brokers that I do know, I mean, they just get flooded with them all the time. And so it's like, how do you, I wouldn't say drown out the noise, but how do you pick and choose? There's only so many hours in your workday. How do you
Mhm.
know who you're going to deal with, who are you going to talk to, who are you going to call back? And that's where, for me, as an investor, that the relationship is so important, is because I want you to pick up my phone call. I want you to answer my email. We always try to be like, Tim and I always try to be very upfront with people or brokers when we're like, your time is valuable, our time is valuable. If we can provide you like here's our buying criteria, right? Here's the things that we like, here's what we don't like. And that way, when you get a property, you're like, oh, these guys, I remember this is something that fits their box, and you send it to me. I think that that's something that, as the relationship deepens between investor and broker, you just kind of already know. Like for us, we've done so much stuff together now where if you come across something, you might immediately think, oh, I think Seth and Tim might like to buy this, or this might be something that fits into their box. And so, like, let me send it to them. And
Yeah.
that's very important when you're trying to move into different markets.
Yeah. And I think as you get to a mature market, those kinds of dynamics probably become more important, particularly in places like Chicago or Los Angeles, maybe Orlando, Florida. Um, Columbus is a little bit of a different dynamic, and it's cornfield town that's becoming a big player, right? And so um, it does tend to be a little bit different in that regard. But I do think one thing that's unique about our market is that you have a lot of competition in multifamily right now. And so I think it really does make sense, some of these talking points. If you want to be in the Columbus market, and maybe this is true like Cincinnati, Dayton, maybe some of the tertiary, like you and I were talking about Licking County. So Licking County is part of the Columbus MSA. Sometimes properties will come on the market here, just crazy price.
Mhm.
I talked to somebody recently, one bedroom, they were talking about 100,000 a door, which is just insane. And we're talking 750 a month rents. Um, does that work? Would somebody be interested in that? I mean, maybe, but there are markets like that. And so,
Mhm.
but from a buying perspective, if you're thinking about buying in the market, I think you have to understand what that dynamic is. And you talked to me about like how many phone calls do we get? I was actually thinking this week as I prepared for this, what my last listing was that we took to market and just broadcast it. And that's typically what we do.
Mhm.
Just by way of full disclosure, typically when we get a product or an order from a apartment owner, it just goes full scale. Maybe our current clients, people who are actively buying and closed like within the last year, they might get a 12-hour or 24-hour window before it goes out to the whole universe. But that's just kind of the process more than anything. But the last one we did was like a 20 unit, I want to say. And it was on the west side of Columbus towards Hollywood Casino. We probably got 12 offers on that in the first 48 hours, I want to say. And no joke, 1,000 phone calls that week. And so to your point, how do we handle that volume? I mean, even my staff
Mhm.
cannot physically return those kinds of calls, and then it can take days and weeks to well, maybe not weeks, but it's going to take multiple days to get back on the emails that come across that as well. And so I think we do our best, but you have to make a good impression when you're competing for a property. And there's two dynamics here that I would probably call out. And I think Tate Seamer, I think Key Lee, who I know is part of the
Yep.
group, have done a really good job with me. Um, with some of this stuff. And the two things that I think would be important is you have to compete for property. So you need to know the market, and a broker can help you out. Like, I'll help you out, but there's some research and some other things that I would encourage anybody to do for any market. And we do the same when we go to invest. I know you do this, but you need to know the market. And then the other thing is, building a relationship with a broker doesn't come when you make your offer. It comes by the other work that you do. And I would say, Seth, that you probably do a really good job of this, with some of the work that you do, and working the relationships in the area, whether it's a broker or other vendor or property owner or whatever. But break down the activity so that you can be effective at both. Because I'm doing a deal right now with a group. They're buying a 40 unit from us, 41, something like that. And we first met them 3 years ago, and the deal didn't work out. And it was to no fault of their own. They wanted to buy the property. The property had some encumbrances and things that we all felt frustrated. They felt frustrated by it. We felt frustrated by it. But at the end of the day, the seller just wasn't willing to kind of get into a place where these things could be resolved. And he had different advisors pecking his ear, things like that happen. And they just had the right attitude about it. They had a big picture mentality. And they even called me up maybe 6 months later and said, hey, we have an opportunity to buy this property in Columbus. We wanted to see what you thought. So I told him, I gave him comps. I told him what we thought, based on price per door. We didn't have a position to be in on the deal, which is fine. We don't cherry pick deals. We just build relationships. And then he asked us advice about operations and things like that. And we gave him some suggestions, and then circled back to him a year later, found out he had done everything we had suggested, and things were going well. But they had some 1031 monies, and they came back to us and said, hey, we need something. What do you got? And it just was the right fit. But I think that's a good example of building relationships, not cherry picking an opportunity, but really being, having a big picture, a macro perspective, being in it for the long term, and doing the homework. And so that's, I think I see the successful investors really investing in a relationship that way. By contrast, we get people who are very aggressive about a particular deal, and sometimes they try to put pressure on you. And I'm not saying that there's not going to come a time when it's not going to be a buyer's market, but if you understand particularly the Central Ohio market, it's a seller's market. And so I think understanding that and approaching it that way gets you a lot farther. And I'm not just talking about for me. There's plenty of multifamily apartment brokers, and I think if you want to try to connect with them, that's probably something that would benefit you, is to separate the deal from the relationship, so that you can get some dialogue. It makes an impression. It really does.
Yeah, I agree 100%. And just to speak to something you brought up too with Key and Tate, Tate is with Greenlight Equity Group, and then Key is with I think it's Elevate REI. I'm not sure on the whole thing.
Yes, that's right.
Sorry, Key, don't hate me for that. But the whole point is that, like, if you have a great relationship with brokers, and then you have people that are coming into your market to buy, that's how Tate and I and Tim did two deals together, is because they were coming into Columbus. We were already kind of established here and operating apartments and buying them, and kind of and so they were like, hey, let's partner together, because it would make sense. We're not there, we're not in the area. Like, you guys know the market, you guys have local connections with contractors and different things that help us out, like, to make the deal be successful. Because in my world, ultimately, the deal being successful, the investors making their money, us making our money, like, all of that is super important. And even for you selling the deal, you want to be selling it to somebody is going to be able to perform both in the closing process, but also once it's sold, can they actually handle this, right? Because that doesn't bode well either, if you sell and then 6 weeks later it goes into foreclosure, or 6 months later. So I think that's super important. But that's something where, if somebody calls you or calls another broker and they're like, hey, I'm out of state, but I want to, do you know anybody local, like any local operators that are that maybe I should connect with? That's a great referral. And that's something that, like I said, where we're constantly networking, but that's something again where it goes back to relationships, where the relationships can be more important than the deal, and you can even get more deals done because you have great relationships with brokers, and then it just connects you to everybody else. I just think
Yeah.
it's great.
Well, that's right. And there's an old saying in our world, and not just the real estate world, but the sales world in general. Um, 50% of something's better than 100% of nothing,
Yep.
and so that collaboration, that sharing of knowledge, I think it becomes important as you dig in and where the rubber meets the road. So to that end, I'm very big on collaboration and partnership. And to something you said that I think is near and dear to my heart is that when um, an investor comes on to a project, that they have the ability to get it done. And I think especially a mature broker understands this, because there's plenty of competition for a seller to get the prices that they're asking, but we want to see success. We want to see people be able to come in, take on the project, and really grow, because Columbus is a growing market, and it has a significant housing shortage. And that's not to say that there's not dynamics within operating an apartment complex, if we're talking about apartments, that don't have headaches or challenges or economic factors to them. But the idea is that the opportunity is here, but it needs directed. And I think
Mhm.
that's something that you guys understand. And you have to underwrite an asset to make sure that you can complete the task. Count the cost, kind of an idea. And I think that it's okay if it doesn't work out. But that's
Mhm.
something, as you think about working with a broker and kind of some of the talking points that we had discussed earlier. But I think as you go to work on an offer, an apartment offer or any other kind of commercial asset, you kind of you have to know what you need to know as you make that offer. And
Mhm.
so, you know, I know for us, when we take a product to market, we try to have all the due diligence material as best as we can have it. Some people won't do that, and that's okay. You need to be able to get what you can get. But sometimes, and sometimes, not all the time, but sometimes a product is there's so much demand for it. You kind of have to understand as a buyer what you need to have in order to be competitive with that offer. And
Yeah.
so it might be a complete pro forma deal. And especially in apartments, we've done that. I'm working on one now. It's literally the rent roll, and it's a building that has no deficiencies. And so it's just going to be a rent roll, a sale, with some other pieces mixed in. But if you're a buyer and you're saying, "Hey, I need all this information, 3 years financial history, yada yada yada," verification from the seller, all this and that, you're going to lose out. I mean, you kind of have to understand where you're coming from, and if you talk to a broker about that, I think you'll get leverage. And that's the other thing, is understand it's not really the broker who's creating the dynamic. It's really just kind of the way of the market. And
Yeah.
so things might turn. You remember back in what was it, 07, 08? This just came up in conversation, but the housing crash, and all of a sudden, in Columbus, we had attorneys and experienced brokers and other people just writing like thousands of letters every week, offering to buy people's homes, and they would buy them for 11 cents on the dollar, basically. And that didn't go on for too long, but nationally, you would see housing prices crash, and people's homes that were worth 400,000 now being worth 300, and people living in large cities where they paid 600 and they're now trading for 200 and stuff like that. There might come a market then, and then all of a sudden things shift in terms of how you look to buy. But when you're in a mature market and you want to gain access, I think those are some of the things you have to consider. And so, but hopefully that idea helps separate the
Yeah.
broker relationship from the deal, and then when you're doing the deal, work to compete.
Yeah, yeah, absolutely. And I think that that's too, like, if you go to, well, first of all, like pro forma. So there's people that are watching this that don't know what pro forma means. It means it's basically like your best guess or an educated guess on what you think it is. Now, the brokers, when they put together pro formas, as far as the like from an investor's perspective, it's kind of like they're looking at the market and they're kind of saying, here's where it's at, here's where we think it can go. And they're kind of giving you like their educated guess. And then it's on you as an investor to also like, kind of educate yourself on the market, find your own comps, like all the different things. And then you make your own decision. Do you believe or agree with what the pro forma is you're reading in the offering memorandum, or do you not? And if you don't, then you offer on what you think is more accurate or realistic. And then if you do, again, if you're going into a hot market, I mean, it is what it is. I mean, you're not going to be able to get every piece of paper that you want verified, and that's something that a lot of people will teach is like, oh, here's the items that I need, and
Yeah.
if not every deal can provide that. So I think that
Well, yeah, that's real. I mean, I think that's really well said. And when you come into this market, particularly Columbus, so let's talk about Columbus. I
yeah,
think Columbus is one of the hotter apartment markets across the country. And locally, what we found is there's a lot of, and this has been going on for, probably 20 years, and it's okay. But a local buyer will come in, will buy a property for X and at like a 9 cap or 10 cap. 2 years pass and the market compresses. And so all of a sudden that 10 cap is now an 8 cap. And that same type of buyer wants to go back to the market and pay a 10 cap rate. But
yeah,
it's not a 10 cap market anymore. It's an 8 cap market. And then, so what I try to help people understand is if a deal doesn't work for you, it's okay. But it doesn't necessarily mean it's priced wrong. It's just the buyer who's buying it has an ulterior motive. It's different from your buying agenda.
100%.
And it just is a matter of, do you want to be in this market or not? And so I think the reason why people get in this market is not because of the initial cap rate. It's because of the long-term sustainability. And one of the things that, and a little bit of background on me, I have a wealth management background. So I started out with American Express as a financial planner. Then I went into, when I married my wife and moved out here, I ended up with New York Life and did more business planning and insurance and some things, but it was always on the financial scale. And so what I like about what I do here in commercial space, it's still investment. And so the thing that's great about commercial real estate, it's a great place where you can conserve your wealth. And if you want to see large 20% every year returns, you better really dig in on the real estate, and have a very active hand, or go get an Ameritrade account and do some day trading and get some penny stocks and things. But ultimately, people come to Columbus because they know it's a place where they can protect their wealth and they're going to get some growth. And there's some big growth opportunities as well in the various asset classes. But if you have a year one and a year two perspective, and all you're doing is trying to cap rate this thing right now in this market, even with interest rates changing, I think you're going to be hitting your head against a wall. And you might try to talk to other guys, like, for example, you, Seth, or other, active and successful investors, because I think that there are long-term perspectives that are required. And then I think there's also kind of a value add perspective, which you have done very successfully, I think, with how to approach a project and make the right type of improvements so that you can position your capital well.
Yeah, no. Well, first of all, I appreciate the kind words. So I will say too that you just add to that before we jump on to our next topic is that we lost the deal. We were bidding on a deal in Dublin, Ohio. I think Walker Dunlop had that deal, and it was we bid. I mean, Tim and I underwrote that thing for like 2 weeks, and we were like dialed down to the penny, right? Because we were like, we knew exactly what the highest price we could go in at was, what the debt service coverage ratio would be, and how this thing would play out if we had to go get financing on it. And I think we bid like $52 million. It was a phenomenal deal in Dublin. Biggest dollar amount deal that we had done to date that we were shooting for. And it was funny because we made the best and final, and then we got squashed like, little ants by a group out of New York that was an equity group that just came in, and they paid like $2 or $3 million more than it made sense, and they paid cash. And it was an amazing experience though. It was almost like an honor to get squished by those guys, because it just made us see like, and then talking to the brokers after it closed was like walk us through that. Like, why would these guys pay what they paid?
Yeah.
And it was like the big things that we kind of understood was their cost of capital was like next to nothing.
Yep.
And they had all this money that they have to place. I mean, they have more money than they know what to do with. And the longer it sits in their equity funds, the more
Yep.
interest they're paying out to people. And it's not, so they were like, look, they can afford to pay $2 million, $3 million extra, then hold it like that way for 6 months, refinance it, get all of their initial capital back out, or at least a big chunk of it. And then, and so again, it's just, could we have taken that deal down and handled it? Yes. But there's just, like you were kind of saying, there's a different buyer,
Yeah.
and they were buying for different motives. And we just, like in that deal, we just couldn't compete with them.
Yeah, that's right. And I mean, there's different mindsets behind money is probably how I would frame that. But you will find that an insurance company only needs to make 2% on their money.
Yeah.
Period. I mean, over the long haul, because there's a mindset there that don't lose this principle. It's and so they can go extremely long term, very slow. And so they're going to look, and this is, when I first got into business, I chased after a tower in downtown Columbus because I really wanted to, get it and market it. And, it would have been so cool, like $65 million sale, redevelopment opportunity in the heart of downtown Columbus. And I think I learned pretty quickly. And I have, 10, 15 years of experience at that point in the business world. If you chase whales, you might end up just starving yourself to death. And so you have to have a realistic approach on things. And that's really true for apartments as well. And it's absolutely awesome to take big swings. I mean, it's fun. It's fun as an investor when you're buying it. It's fun as a broker. It's fun as a business person. It's fun for your family. I mean, and don't get me wrong, there's stress points too. So it's not like it's just a walk in the park. But the fact that you've arrived and you can do that, I think, is pretty awesome. But the one comment I would make is you also need to know who you're playing with. And so in parallel on the storage side, my wife, who's also a broker, she's an expert in storage. And there's big equity companies out there, $2 billion of cash, and they want to buy everything that makes. I mean, literally, if they bring them a deal, if it's been vetted by my wife and her partner, they buy it.
Yeah,
it's just like that. And I think that in the situation with A and B class large spaces, apartment deals here in Columbus, these guys can take a 4 cap. Their debt might be 1.5%. They might be able to amortize it out over 40 or 50 years. They're not looking to make a whole lot of money off of it. But again, why is it? Because they're conserving their wealth. And so I think it's there will be opportunities, and there's ways to create space in that A and B class arena. But I do think that conversation comes down to your accountant with your cost seg, with your lender, and what kind of debt, you can have to compete. And then it's just got to be the right opportunity. And, so I think there's just different understandings, but hopefully that points out why having the different relationships in that commercial space is important, because you need to understand how to compete. And then there's different dynamics too on the sales side. I mean, you also want to be able to have those relationships, so that you can understand how to do a correct disposition. But, I just think it's important to have some of that information so that you're productive.
Yeah, I agree. I mean, base hits in apartment buildings, they make millionaires, and that's good enough for most of us little guys. That's the thing. Like you said, I mean, in Columbus, we've lost, even on just regular deals, we've lost them to overseas money, people that are in different countries overseas where they're just trying to avoid negative interest rates. So like you said, they're maybe the real value is a 6 cap or 5 cap or whatever, and they'll pay 1 or 2 points, less than that, because it makes sense for them, because all they're doing is competing with negative. So you definitely have to evaluate that when you're looking at a deal, and like, who's going to also be my competition. And then if you lose out, don't get discouraged. You just move on to the next one, and I think that a lot of great relationships between investor and broker can be built by the broker seeing how you handled yourself during the trend, the offering, and the them talking with you, and kind of, like I said, building that rapport. I mean, pretty well quickly if who you're talking to, because you talk to all kinds of investors, if they
Hmm.
actually know what they're talking about or know what they're doing, and whether it's worth your time to continue to pursue. So
Yeah.
that kind of brings me into the next part that I love, or I shouldn't say I love talking about, but I want to talk about it specifically is if you're an investor and you're trying to get into multifamily, commercial, it might be your first deal. It might be, maybe you had like a 10 unit, 20 unit, and you're trying to get into something bigger, or maybe you're trying to get into a market where, we've had a great success in Central Ohio, but, Tim and I are looking in Chattanooga, we're looking in Florida, we're looking in the Carolinas, like we're looking in these other areas where we don't have a local presence there, and most of those people have no idea who we are. So when, I guess just your thoughts on, like, if somebody contacts you or they're contacting a broker, like what are some key things that you can say, like, good things to say that maybe help build confidence with you, or things that, like, you don't say when you're calling somebody, where almost like, because there's a vetting process. Like if I called you on the phone and we've
Hmm.
never spoke before, within just a few minutes, you're going to be able to tell, like, is this guy a legitimate investor? Does he own apartments? Has he closed on deals? Like, what does that kind of conversation look like? And kind of like, what are some things to say and some things not to say?
Yeah, good question. I think, not all brokers are going to be the same, and so you don't. The first thing I would say is don't be discouraged. It's like cold calling, and so um, I've done I've done lots of cold calls, and a lot of times early on in my life when I just felt like I don't even know what I'm going to say. I feel like a dork. It's so awkward, and so that's probably the first thing I would say is, you might have to approach different brokers differently, and that's okay. Don't be discouraged. For me, and I think this is probably true for a lot of more mature brokers. Just be yourself. Don't try to act like you've got the answers. Don't try to act like you've arrived. People who have arrived, they just kind of talk. That's kind of the secret, right? I mean, you think about Warren Buffett, he's just a man. He puts on his pant legs, one leg, one pant leg at a time. And, he's just figured a few things out. But, when you talk to somebody and you're trying to get into a market, just be yourself. If it's your first time doing a transaction, it's okay to say that. Don't expect to get to work with, I'm trying to think who the top coaches are, and I'm thinking Ryan Day at Ohio State. You're not going to get to work with the head coach of Ohio State if you're the first, if it's the first time and you're trying to get them to help you buy something. But if you open the door, you might get to be working with someone on their team, and I think that helps. But they might have something that's perfect for you.
Mhm.
But I guess my point is don't treat you just treat it like it's an introduction, and don't treat it like they owe you something. I think that's probably advice you can take to the bank, and then be prepared. If you're gonna make $1 million purchase, you should be able to prove it, and it's just a normal conversation. So here's my letter of reference from my lender. Here's my proof of funds, and so on. And if I get a lot of calls from guys who are working with syndicators. They've got some money. They're going to participate. I don't think there's anything wrong with that, but just be upfront about it.
Mhm.
And, and then if you were going to get serious in the market at some point, you probably bring that player in, so that they can, make that ultimate impression. So I would just say that's probably my biggest advice is, be yourself, be honest. I think that opens up a lot more doors than people who try to act like I'm going to do this or that. And then, 30 seconds into the call, you can tell they've never done a deal before.
Yeah. Yeah. I know there's a lot of, like, different education groups or whatnot that they like kind of like teach the lingo, and they're like, hey, if you can just, if you understand what a cap rate is, or you understand what pro forma is, and some of the things that we're even talking about today, like, if you don't know what that stuff is, obviously you need to understand, get a better understanding of what, just the terminology is, because it's completely
Hmm.
different than residential. It's different than house flipping. It's different than
Yep.
all of those things. But,
Yep.
I think that, yeah, don't be bashful, like, to not call people. But I do think that it is super helpful. I can tell you from my first deal that I ever did, that it was a home run deal. But it was not by my own doing, right? I was there all the time, and that was the reason why it ended up working, but it could have went wrong at various different levels. So that's something that I think you kind of spoke to, is if you're going into a new market, or if you're newer and you're wanting to get into the multifamily space, is teaming up with somebody else that already is doing it or is farther down than you. Because that's what I see a lot of is,
Mhm.
the lenders, we have people that call us and they'll say, hey, look, I found a deal in such and such part of the country or this part of Ohio or whatever.
Mhm.
And they're like, but the lender wants me to have somebody with more experience, like on the loan, or partnered with me or whatever. And so we've been able to expand our equity chunks from different deals that maybe we don't have any direct daily activity in, but we've
Mhm.
been able to become, like, come in and kind of co-GP it with people because they've needed that extra person to be on the deal, or to sign on the loan, or to do whatever to get the deal across the table. And brokers know that. I mean, so that's not something, like, if you're new to commercial multifamily and you're scared to make that first phone call to a broker. Like, I think that, like he said, if you've got in a relationship with somebody that's already doing it, like
Mhm.
anybody in in our fireproof group, they find something that they think is a good deal. Tim and I we've done this for other people. We'll look at the deal, we'll say yes it is, or no it's not, and here's why we don't think it
Yeah.
is for us. But then, we'll get in the deal with them too, and it doesn't really matter where it's at. If it's in a good market that we like,
Yeah.
we can do it all day long.
And I think that's good. I mean, I think partnering is, it's a synergy. You're really multiplying the effect. I think sometimes though, in some situations, people either need or want or have a unique reason for wanting to be on a deal, and maybe this is your first deal. And my encouragement would be, if you're starting, um, on a first to the market, and you're wanting to do a deal by yourself, or maybe like you and your family or whatever, um, you know, maybe you can buy that 30 unit or 60 unit, but don't be afraid. I mean, there's a lot more inventory in that smaller range, like 12 units, 20 units, 6 units, particularly in Columbus, that I think are viable and are good entry points to get into the market. And so, and we have, I mean, we have agents and resources to help with that. And I think that that's a good stepping point for people who are looking to break into a market, or looking to get their feet wet. And I think community banks are good, a good resource there as well. Sometimes I hear from investors, we're going to put permanent debt in place on these assets. And I would just say, maybe do a little more research. Fannie Mae and Freddie Mac are great, but they're not for everybody, and there are penalties and things. And so, if you're established or if you're committed, yeah, that could be a good stepping point. But there's absolutely nothing wrong with doing a traditional community bank loan, because it's easy in, easy out. You have competitive rates. And it's easy to close, and I think that allows you to get in the market. The other comment I'll make as we finish up, and this is just, I think, things that I've learned from guys who've done this apartment deal for 40, 50, 60 years, and now we've seen as well as brokers over the time. Don't ever be afraid to put in more than the minimum. If people come to me saying they want to do 20%, I think, why not 25%? You put yourself in a position to be successful. I see guys who are now doing 30 and 35%. Again, you put yourself in a position to be successful. And the whole point of doing this is to protect your wealth and to slowly build it over time. And in a good market like Columbus, you get a lot more attention from both brokers and lenders if you put more money into the deal. And just given the nature of Columbus's growth, you'll also see your equity growth over time. And so it's okay. Like, maybe you can buy a $2 million building with a 25% down, but why not take that same down payment and put it into a $1.5 million deal that you like?
Mhm.
Okay. You'll get a better interest rate from the bank. You'll get better cash flow. You'll, maybe even be able to get some money through the bank to make some initial improvements. So there's lots of strategies to help you be successful as come into a market.
Yeah. Yeah. No, it's great advice. Great advice for sure. Like I said, the wherever most people are at, like I said, some of the smaller deals, they still make millionaires out of you if
Yeah.
you can get into them. So that's really the big thing is, you get $1.5 million deal closed, you hold it for any length of time. I mean, you're well on your way to
Right.
cross that threshold and then get into the next deal.
Yeah. And the one thing that I've seen you say on Facebook that I would just reiterate here: don't wait. right? Your best investment started yesterday. You just have to plunge in. I'm speaking from personal experience, as well as working with investors and seeing what guys like Seth Teagle and Tim Shaw are doing. But get after it. It's a good opportunity. I don't see population growth, waning anytime soon in some of these good markets. You're going to have strong demand. So what are you waiting for? I mean, get after it. There's a lot of good things happening in the industry with apartments.
Yep, absolutely. So, all right, well, we're hitting 45 minutes. I'm gonna probably, we'll call it today. I appreciate your time, Seth, and coming on and sharing some knowledge and insight. I've got his email, everybody on the bottom there. It's kind of scrolling by there. So you
Yeah.
can contact him via that if you have any questions, or you're looking to get into the Columbus market, and you're looking to just grow your broker base. Give him a call. Like I said, he's helped him and I buy, oh my goodness, what, 10, $15 million worth of real estate in the last year or so. And then this land deal that we're working on is going to be a massive undertaking, but also a great opportunity for us. So, he's a great friend of mine, and also person I work with regularly. So, look him up if you're looking to get into Columbus.
Yeah, and I mean, I think we would definitely welcome anyone reaching out. I'll make sure that you get our contact info, and even on our website, which is ohiocommercial.us. You can go on there, and there's a form to fill out. But whether it's myself or somebody from my team, we're definitely able to take on some more projects and work with some buyers to find some properties. I think also, there will be, folks who, get to a position where they want to sell, whether it's here in Ohio or elsewhere. But we'd be happy to talk to you. I mean, it's obviously got to be a right fit. There's some evidence that when an SVN advisor is involved in brokering a transaction, they bring 9.6% more than, a traditional, what you might call off-market or off-marketed property. But I think it's more of getting out of it what you've put into it. So if there's a situation like that, we'd be happy to talk. But yeah, really excited to see the things that you guys are doing. And there's a lot of good multifamily activity going on in Columbus and Ohio. So feel free anytime, reach out. It's easy to chat online or take a few minutes to a phone call. And Tate, if you're watching today, I know I owe you a phone call as well. So I'll be reaching out to you here this afternoon.
So, all right. Well, you guys have a great day, Seth. I appreciate it again. Like I said, we're going to be jumping on again. Hopefully, we're trying to do once a week. That we'll be doing something like this. So appreciate it, everybody. Have a great day.
Great. Thank you. Bye-bye.
Yep. Bye.